So good afternoon, everyone. Before we begin, I would just like to take a minute to introduce myself to you all and to thank the four clubs for hosting this afternoon. For those who do not know me, my name is Eleanor Marsh, and I am the president of the Graduate Finance Association, or the GFA. In addition to the GFA, both the undergraduate and MBA Business and Technology clubs, as well as the Tepper Graduate Finance Club, are serving as club sponsors for this event. Just a few housekeeping items before we begin. The discussion this afternoon will be recorded, as you just saw. And if you have a question for David during the discussion, please type that in the chat feature. Professor Caroli, who teaches the popular corporate financial reporting class, will be moderating the Q&A portion of the event. I would now like to introduce you all to David Zinsner. David is the Senior Vice President and Chief Financial Officer at Micron. He joined the company in February of 2018 with more than 20 years of financial and operations experience in the semiconductor and technology industry. Prior to Micron, David served as President and Chief Operating Officer at Affirmed Networks. He also holds a master's degree in business administration, finance, and accounting from Vanderbilt, and a bachelor's degree in industrial management from Carnegie Mellon University. Please join me in giving David a warm welcome, and I will now pass it over to Dean Damon.
Thank you, Eleanor. Hopefully, can you hear me? David, can you hear me?
Yep, I can hear you.
Okay, great. Well, welcome. Glad you're here. Welcome back to campus.
Thank you.
We're very happy to have you here, and thank you for taking the time out of your busy schedule to be with us today. I just wanted to give people a sense of how this is structured today. I'm going to spend about 25 minutes or so asking David some questions and having a conversation with you, David, mostly about yourself, about Micron Technology, about the economy and what you see going forward from here. And then we'll leave some time where Steve Caroli, Professor Caroli, will take some student questions and ask you some questions directly from our audience before we close it off just before 2:30 today. So with that, let me get started. The first question I want to ask you, David, has to do with the purpose of the corporation. As you know, the Business Roundtable last year came out with a statement on the purpose of the corporation that emphasized the need to create value for all the stakeholders of the corporation. So that includes customers, employees, suppliers, the communities in which the corporation operates, as well as shareholders. I'm interested in this question myself because I teach a course on corporate restructuring, and clearly restructuring is an important part of creating value. And the question is, who are we creating value for? So my question to you, David, is to get us started here is, and I by the way, I noticed that the CEO of Micron, Sanjay Mehrotra, is a signatory of the new statement by the Business Roundtable. So my question to you is, how does this new statement on the purpose of the corporation that emphasizes the need to create value for all stakeholders of the company, how does that impact your decision-making process at Micron? And how do you balance sort of the short-term pressures that you might feel from Wall Street with the long-run interests of the corporation?
Yeah, okay. So, you know, I'm trying to remember exactly when Sanjay mentioned, I think Sanjay mentioned this to me right after he signed it. And I said, you know, he said, you know, I signed this, this statement from, you know, in conjunction with the Business Roundtable, and it said we're looking at things other than investors. And I went, oh my God, what are we talking about? Are you crazy? So I went to the site and I said, I better look at what he said. Then I went through it, and actually we had a conversation about it too. You know, as it turns out, you know, anything that's said in there, it's about, you know, you value the customers, you value your suppliers, you value your employees, you value your communities. In reality, all of that somewhat circles all back to driving the valuation of the company. You know, so, you know, the fact that you would make sure that your vendors are viable vendors, you know, that can survive for the long term. I mean, a lot of the things we do are single sourced products, that we can only get it from one vendor. If that vendor went under, we would be in trouble. Of course, our customers are obvious, right? If any of the customers, weren't viable customers, that's a problem for us. And we'll talk in a minute about one of them. You talk about team, the team and the need to attract good talent. And so valuing that group is important to them, and, thus it should be important to the company. And even around the community, as it turns out, most of the kind of younger generation that's coming in to corporations now, they really think that it's important to, to be impactful, positively impactful to the community. They think it's important that you have ESG, environmental sustainability initiatives. And you won't attract the best and brightest if you don't have those things, front and center in terms of your motivations. So all of those things ultimately come back to driving the value of the company. You do all those things well, it usually will be a good answer for you as a company. That doesn't mean, when you're negotiating with a supplier, you aren't negotiating hard in the best interest of the company, or negotiating with the customers in the best interest of the company. But it does mean that you value them and that they are an important part of your long-term future. And I think, obviously there is a set of shareholders that will be, more short-term oriented and, try to drive your behavior towards those short-term oriented decisions. But I think as long as you have a long-term perspective of the company, and it's about the company being viable for the long term, driving shareholder value for the long term, it will almost always match up with the things that were signed from the business roundtable. And then it's just up to me, when you do kind of face situations where investors are kind of driving to a short term, I just change the conversation to, but this is what's important in the long term. This is why it's important. Those that don't love that will self-select out in most cases. Those that do really want to hold the stock for a long period of time and are important for capital, that usually resonates with them, and they'll kind of hang in there.
Yeah, I agree with you. I think if you focus on long-term value creation, creating value for shareholders requires you to create value for customers and for suppliers and for all the constituencies of the firm. So I really think there's some confusion with respect to what creates value for shareholders and whether that's a long-term focus or a short-term focus. And I think you're absolutely right on the need to focus on the long term to create value for everybody.
Right.
Let me move on, and we had a lot of questions that revolved around obviously the COVID pandemic. We're living in very challenging times right now, and COVID has resulted in hundreds of thousands of deaths, and obviously extremely negative impact on our economy and on employment itself. How has this pandemic impacted Micron's global business, first off? And then what do you see as your biggest challenges right now, and maybe what your biggest opportunities might be as well?
Okay. Yeah, so, initially as, the pandemic was kind of spreading through Asia, the biggest concern for us was continuity of supply, both in terms of supply from our vendors on raw materials or what have you, and then our ability to manufacture, because we actually have a facility in Xi'an, China, which is not too far from Wuhan. And as it was spreading into some of the other areas early on, and they were taking a fairly kind of drastic approach to this, shutting things down, it was causing challenges for us. In fact, at one point, Malaysia was almost completely shut down, and we had to work with the government there to allow us to bring 50% of the team back to actually manufacture. We had to convince them that this was critical manufacturing that was necessary for the viability of not only the Malaysia economy, but the world economy. That was challenging initially, but, probably by, I don't know, end of April, we had that pretty much figured out. And then it all transitioned to, uh-oh, you know, what about our customers? And what we had was a real shift in the sense that we sell products into like the automotive industry, in consumer applications, in the mobile, you know, handsets and so forth. Those, you know, took a dive for sure. They were negatively impacted. But what was interesting is there were other markets that we were in that actually saw a pretty decent uptick. Like, for example, we sell a lot into the cloud space, and you know, the need to use Zoom all of a sudden increases the needs on the cloud companies, which made them demand a lot more from us. You know, we sell a lot into notebooks, computers, laptop computers, and now suddenly there was a significant need for laptop for e-learning, for you know, working from home, and so, you know, for a while there, I would say the increases from certain markets offset the decreases from other markets, and we were actually coming out fairly similarly to what I thought we would do even pre-COVID. But now, you know, I think the big investments that have been made on the cloud side are somewhat behind us, and cloud kind of then normalizes to a level. Laptop, I think, still will do well, but some of the other markets are, you know, taking a lot longer to come back. Automotive is going to take a while to come back. We sell into the enterprise space, which is, you know, corporations building out IT infrastructures, and they, you know, certain of those markets that they serve, like for example, the airline industry, you know, certainly very negatively impacted by this, and you know, are going to take a while, I think, to recover. So we've come into a period that I think was our little bit of air pocket associated with COVID. This coming quarter, I think, you know, we're already kind of seeing it this month. I think it will last a couple of quarters, but then I kind of think that we will start to see a lot of the businesses that were depressed, like automotive and the consumer market and the mobile space, all start to come back. And even if it's coming back, but not to the same levels that it was pre-COVID, that's still, you know, a tailwind to our business. Cloud is obviously going to continue. I mean, if anything, this just accelerated an ongoing trend that was already there, which was a migration to cloud computing. And next year we'll have the 5G kind of roll out in a more meaningful way. And so that should be a positive for the handset side. So I almost think calendar 21 for us, even if it doesn't feel necessarily as good in the underlying economy, will likely be pretty positive for us, just because of either things are coming back or things are gaining momentum because of secular drivers.
So I guess, given what you just said, I take it that you don't expect there to sort of be a sharp V-shaped recovery in the economy.
Yeah, I kind of feel on the economy side, I'm probably one of the people in the camp that this is a little bit of like a check mark, or what they said, like the Nike swoosh or whatever you call it, where you have this downturn, you have a little bit of a, you know, pick back up, a natural kind of recovery to some state, certainly below pre-COVID levels, but you know, something that is higher than the bottom, and then a fairly long path, you know, that takes, you know, a couple of years, I think, to really get back to where we were. I mean, the airline industry, and I keep pointing that one, our travel industry, that I think will take a long time for it to come back. I mean, for us, we're still not traveling very much, and we'll probably restrict meaningful travel for almost this entire year. And then things will start to come back, but people will leverage Zoom and so forth. So I think that, you know, there are certain industries that are going to take a long time to recover.
Do you see any permanent effects either on the economy overall or on your business as a result of COVID? You know, things that are simply not going to be the same as they were before.
Yeah, I mean, I think that, you know, that we had a big business in enterprise investments, and I kind of think that will never really fully recover. Desktop computing and on-premise server applications, I don't think we'll ever get there. Now, I do think for us, we have the luxury of the fact that a lot of it is cannibalized by cloud infrastructure, and so that will be a positive for us. I think that, mobility and virtual kind of communication is likely to be something that's more commonplace than it ever was. And while that might not be good, for example, for the airline industry, that's probably going to be good for Micron because, you need a lot of computing to be able to do that. And so you'll need a lot of memory to be able to do that. I honestly think for us, as things kind of come back, we will do as good, if not slightly better, when it's all said and done, when history's written. But it'll clearly decimate certain industries.
Sure. Now, something that I don't think was really driven by COVID, but the trade situation with China, the restrictions that have been placed on trade, the tariffs and so on, have impacted your business. And we know that the Huawei was a fairly large customer of yours, and I don't know whether you're selling anything now to Huawei, but my understanding is that they were maybe 10% of your revenue, something around that.
Yep.
So what is the situation there, and how does a company recover from losing such a large customer?
That's a good question. One that I get from investors a lot, quite honestly. So we did, as you point out, we did about 600 million with them in the fourth quarter. Actually, at one point, they were a 13% customer of ours. We had done a lot to grow their business. When the initial restrictions came down with Huawei, we did choose to take ourselves out of the networking business. That's the kind of 5G infrastructure that the US government was particularly focused on. We thought, not worth pursuing that. But we did pursue licenses when they initially put the restrictions in a year or so ago. In handsets, they sell a lot of cell phones, and in servers. They actually make some servers. And that kind of brought their exposure down from 13% down to roughly this 10%. But we somewhat recognized that this was, tenuous at best. And so we have done a lot to work other customers within the market and make sure that we had good position with them to make sure the business was diversified in the event that further restrictions would be placed on Huawei. Last month that was announced. It was, I think the last day you could ship was September 14th. And so they go away. But the good news is that in, for example, the handset space, there are other Chinese vendors. They actually, much like they call us FANG stocks, like Facebook and Amazon, there's one they call Vox, VOX, which is Vivo, Oppo, and Xiaomi, the three major handset competitors in China. So we do have a good position with them. And they obviously all think they're going to, get all the share away from Huawei. So we've actually seen an uptick in their demand that somewhat offsets the Huawei demand. And so it's up to the team to go out there and win business. It takes some time because, we got to requal with all those customers and get our products designed into those systems. But, I kind of think that we'll figure it out. In parallel, we did apply for licenses with the U.S. government, the Commerce Department, to try to get a license to be able to ship to Huawei, and it's kind of making its way through the U.S. government. It's really unclear to me whether the U.S. government approves those licenses. They did a restriction in the past; they approved it. This time around, they did these restrictions, but really didn't give us much insight as to whether they would be approved. It's possible they do, and then we'll have the high class problem of, some people have spoken for a lot of our product that now Huawei will have to figure out how to divvy it back up again. But I think we'll kind of get through that piece okay. I think the larger question for us though is, just saw last night that SMIC, which is a semiconductor manufacturer in China, now has restrictions placed on it, whether it can get equipment. And so it's possible that this is just, the early part of a trade war that will restrict a lot of shipments into China. And of course, as I said, we have we have other customers other than Huawei, but several of those customers are obviously China customers as well, and we'll have to figure out whether what sort of challenges will be faced in terms of doing business in China going forward. The other thing you mentioned, and I'll just mention it again, is so another thing that the U.S. administration did was they put tariffs on importing products from China back into the U.S. And so we have this Xi'an facility that manufactures some of our product, and we do bring that back into the U.S. So we have incurred tariffs. We were able to kind of flex our operating model to allow some of that manufacturing to get moved into the other locations so that we wouldn't have to pay as much tariff. And we got this tariff. I mean, at one point, I think like had we not mitigated it, this tariff was like a $75 million a quarter exposure to us. We were able to mitigate most of it. And so it's kind of runs anywhere from, I don't know, high single digit millions to high teens millions, depending on the quarter, but we have mitigated most of it. So that hasn't presented as much of a challenge as it looked like it would be, when they initially announced the tariffs.
I see. Yeah. Let me ask a question about new markets, new technology, innovations in technology, which it's clearly transforming and disrupting every aspect of our economy. We're seeing innovations in things like artificial intelligence and machine learning, autonomous systems, Internet of Things, robotics. It's pervasive now, which probably has created a lot of new opportunity for your company. What do you see as the most important changes that are currently taking place as it relates to technology? And how is the company positioning itself to take advantage of these changes?
So I think, if I had one thing that was super impactful to Micron, it is artificial intelligence, because it will run the gamut for us. It's from a supplier perspective, the amount of memory required to do artificial intelligence computing as opposed to just traditional computing is 6 times. And even on the storage side, it's 2 times the amount of storage. And you're already talking about compute requirements that are significantly higher in these data centers than anything we see on a laptop or a desktop or a phone. So this is a significant opportunity for us as a customer, but it's also a significant opportunity as for us as buying this, in the sense that, this will profoundly change the way we run our business, quite honestly. We're already starting to implement artificial intelligence in our manufacturing facility. Actually, outside of manufacturing, the first department within the company to start utilizing artificial intelligence in decision making was actually the finance department. We're starting to use it predictively on cash flows. So, and this is one early use case that will be, hundreds of use cases in the next several years. So I think that is, going to be a meaningful impact. It's good in the sense that it should make us better and smarter, faster in terms of decision making, but it's also fairly disruptive. I mean, there's a whole employee base that's built on the idea that they don't have artificial intelligence. So we got to think about how to transform that team into one that knows how to leverage that and changes what they're doing in terms of their work to augment artificial intelligence, because probably, a lot of the people within Micron, what they're doing today is something that will be done by AI systems. So I would say that one is hugely impactful to us in a lot of different ways. It'll make us better in terms of how we manage operations. We'll be able to predictively manage the tool set. We spend $10 billion, $8 to $10 billion a year in capital equipment and infrastructure, and how to leverage that is the only name, the name of the game here. And so the ability to do that quicker and predictably will be amazing. So I'd say that one's a big one. The other one that I think will be somewhat amazing too is autonomous driving. I think for a long time, everybody was saying autonomous was right around the corner. And, those that really understood it said, believe me, it's way off. Now I actually think everybody's got it the reverse. Now everybody's kind of convinced themselves that this is way off. And I actually think will be measured in a few years, but that it really comes to pass. I mean, Tesla's already doing amazing things in terms of autonomous driving. That also will be a tremendous opportunity for Micron because the content increases are massive. To give you a perspective, a normal car right now probably has 6 gigabytes of DRAM in it, maybe 8 or something like that. Most of these autonomous vehicles have over 100 gigabytes of DRAM, and probably storage at like, I don't know, a terabyte of storage, maybe even more to store all this data. So that's going to be an unbelievable opportunity. And really, I think about the automotive industry, which is built on, mechanical engineering, and really the next, decade and forward will all be about computer engineering. These things will be literally servers with 4 wheels and a steering wheel.
Yeah, yeah, and we're seeing that ourselves.
That's the level of compute that will be required. So, yeah. Sorry.
Yeah, no, we're seeing that ourselves here at Carnegie Mellon with the companies in the automotive industry wanting to come to campus to work with the researchers here.
Yeah.
Not necessarily on how to build a better engine, but how to use technology to build a car.
Absolutely.
Yeah.
And then the last one would be 5G, which will also be a profound change for everyone. I mean, now with 5G, not only will it change your phone and, in terms of download speeds and so forth, and likely there'll be, I was watching the guy, the CEO, Steve Mollenkopf of Qualcomm, gave a speech at Micron, and they asked him what he thought, would be the new applications of 5G. And he said, I don't even know, but I know it will be amazing because, when 3G and 4G phones came out, nobody anticipated you'd be able to, push a button and get food delivered to your house, push a button, get a car to come pick you up. I mean, we take it as commonplace now, but, a decade ago, that would have been crazy to think that your phone could do that. And so, when 5G comes, there will be those kind of, significant disruptor type ideas that will come in the handset that probably none of us have even thought about. So those are probably the big ones for me that I think will be really impactful, not only to Micron but also to to the economy and to the world.
Yeah, you mentioned, it was interesting. You mentioned that it's the advancements in technology, especially AI, have really changed what you do as a CFO.
Yeah.
And I can imagine in your 20 years in finance and operations that you've seen tremendous change in your responsibilities and your role as a CFO. Can you speak to that just briefly about what you need to know and what you do, what your responsibilities are, what your role is within the company have been sort of changed because of technology, because of the need to use more data, more analytics, more technology in running the finance side of the business?
Yeah, it's a good question. I think a couple things here. So when I started, and you looked at all the CFOs that got hired, in general, CPA was either required or strongly encouraged for you to have. It was all about rolling up the numbers, understanding the accounting rules, making sure things were accurate, making sure controls were in place. And Sarbanes-Oxley, which came out in kind of the mid 2000s, kind of pushed that even further. Now I think it's really about us being a strategic partner to the business and providing insights and helping drive good decision making. And so, it's funny, I find myself as much spending my time on things around HR issues and how to build a good team, what we need to be thinking about on the operational front. Are we investing in the right technology? Not only for the business, but also for our products. And so that's really where I spend a lot of my time. So it ends up being about leadership, about creative thinking, about just curiosity, and about really, not getting pigeonholed into, what investors want or what the numbers tell you. They're like, for example, we're going to spend $9 billion in capital this year. And in the first 2 quarters, we'll probably spend almost 6 billion of that 9 billion. And it'll take our cash flow negative, which we've done a fairly good job of not doing. And I think if under the old school CFO approach, it would have been absolutely don't do that. You got us, hold off, don't spend that money. But in, the new day and age, it is about, taking appropriate levels of risk to try to optimize the business so that when you come out of these kind of situations, you're in much better place than you were before. And so I think that's the biggest thing. On the finance side in general, though, I think the thing is that almost everybody we hire now, if they don't necessarily have to have a degree in data science, but they have to pretty much be that kind of person, somebody that understands that, a lot of answers can be had out of the data. And it's really, the art of being able to get that insight out of the data that makes the finance team really valuable and helps the larger team make good decisions.
Sort of like a Tepper grad.
Yeah, exactly. Exactly.
Now let me, before we go to Q&A, I want to just ask you one question about, you've been in a leadership role for a good part of your career. I want to sort of ask, what was it that contributed to your success as a leader in business? Can you share some lessons learned along your journey into the C-suite? What are the 1 or 2 most important factors that contributed to your success?
Yeah, I think one is that I was willing to take risk at a number of different places in my career, but not take risk just for a payday, but take risk for the learning opportunity it gave you to take that risk. And when I left when I left Harris to go to Intersil, which was a leveraged buyout of Harris's semiconductor business, almost everybody told me that it was a dumb decision and that they wouldn't make payroll 2 quarters in a row and I'd be out on the streets. But I took it anyway because, hey, it was a chance to learn something new. And it's the buildup of all these learnings that actually is what makes you somebody worth having and hiring, and regardless of what level you're in. And so that was really the major thing I always did, was just try to learn and be willing to go do something completely out of my comfort zone and learn to do that. The other thing that I would say to everybody is that for me, I think the other aspect of being a finance leader is that you have to maintain good integrity. And so there's been plenty of times in my career that investors have pushed, or internally they pushed to make decisions that compromised my integrity. I've never made that decision. And, those that, and a CFO early on in my career told me that it's the one thing that is so important to your career, and if you lose it, you've lost it forever. You're never going to get it back. So I've always maintained a high level of integrity, and I think that's been really important. And then the other thing is, I think at some point in your career, you'll need some help, and from a mentor or from somebody that has influence over your career. And I think maintaining good relationship with them, but also having those people, allowing yourself to not know everything, and make sure that you're always, bouncing ideas off of somebody that's been through a lot of this stuff in the past is really helpful. And I had this, the CFO of Harris, when I was there, I worked with on some projects, and I maintained a relationship with them, and, asked them questions here or there when I was just a little snot-nosed analyst. And lo and behold, I get this opportunity to be the treasurer at Intersil, and I'm going to go over there. And then it just comes up, just as I've been offered the role, that actually there's something signed in the document that no one from Harris can go to Intersil, and no one from Intersil can go to Harris. And so you're done. You can't go there, actually. And I went, oh my gosh. And so I I said, I'd really like to do this. And so it had to go all the way up to the CFO. And I'm about 18 levels below the CFO, by the way, to make this call. And he actually made it in my favor to go there, even though I was leaving his department. And he made it based on whether it was good for my career. He actually analyzed that to determine that. And one, that's just a good reason why it's good to network and have people that are looking out for you. But also it taught me about doing the same to people that work for me in any time. And so I've had probably 8 different people work for me that have gone on to be CEOs or CFOs, but I've always helped them position themselves for that role. And when they're ready to go do that role. Bad answer for me, because they were really good if they got that role. They were really good worker for me, but I think it's better to develop people and have their best interest in mind. It brings the other, the team beneath them, they're excited to come work for you if that's your approach.
Yeah, I think that's a great testament to your leadership if you have the ability to do that and support your people in their own careers.
Right.
That's wonderful. So thank you for your insights and the advice that you've provided, David.
Yeah,
I'm gonna turn it over to Professor Steve Caroli now, who's collected some questions from our students and is going to follow up with their questions. So Stephen, I'm going to turn it over to you.
Great. Thanks, Bob. And thanks, David, for being with us. I'm really excited to ask some questions. So we've aggregated questions from the class that I'm teaching right now, actually, which is about corporate financial reporting. So we have some good ones for David, I think. But also, if you're attending and you have questions for David that you'd like me to ask, I'm happy to moderate those too. So please enter questions in the chat. And I will relay those questions as well. So I'll be keeping track of those. David can just focus on his answers, and I'll focus on the questions. Okay, so I'll start with a question that we had from our class, which was, do you see an impact of COVID not just on your business, but actually on the reporting that you do to your investors? So we're very concerned in corporate financial reporting with communication with investors. Do you foresee a change in how you use technology to do that communication? Over time, we've seen big trends in the use of technology. One thing that we like doing in class is actually watching Netflix investor relations channel on YouTube. So, for example, which didn't exist 10 years ago,
right,
but exists now. So, do you foresee big changes in how you communicate with investors going forward?
Yeah, so I think, again, this gets back to this COVID opened our eyes in certain cases. And I think this is one of the ones, I used to schlep around, I'd fly to New York and then I'd meet with 6, maybe investment firms. And maybe I'd get to Boston the next day and meet with 3 more. And then I'd be completely tapped out and have to fly home or what have you. And it's just been amazing how much more efficient we've been able to be in terms of meeting with investors now that you can do this by Zoom. I don't know, there's going to have to be some face-to-face, I think. People like to have dinner with you and stuff like that. But I do think we can have a whole lot more connectivity with investors. And by the way, all investors are not in the U.S. They're outside of the U.S. and that they're even more challenging to get to go see on a regular basis. Now we can do that pretty easily. I usually have a set of investors I talk to from London, and I can knock those out in a day without ever having left my office, which is incredible. The other thing that we are doing a lot more of, I think, because of COVID, and because that we can leverage this technology, is doing a lot more kind of what I would call webinars. Like a lot of times, if I go out and meet investors, I mean, I'm okay on technology, but I don't know how to design a chip, so it's harder for me to get into the nitty-gritty details sometimes of certain things within the company. But they can actually, there are people within the company that can do that. So so we do a lot more kind of webinar kind of meetings where we invite a whole bunch of investors to a call, have somebody who's really technically proficient in something walk through exactly why something is good or bad going on in the business. And I think that's helped out a lot too. So some of it's around proficiency, some of it's around leveraging tools. I mean, we obviously use Twitter and Instagram and all those kind of things to try to get our message out too. But the challenge with a lot of those things is, a lot of this stuff is so nuanced that you really want to be able to take your time and explain it. I don't know, remember exactly how many characters Twitter has, but we need more characters than that to explain our business. So it is still more about the human interaction, but it's the human interaction of leveraging these virtual tools to be able to do it.
So I guess one follow-up question to that is how do you think about how widely to broadcast the different pieces of information that you're trying to communicate? So you're talking a lot about investors in different pods or different locations, and they almost seem like they're very segmented in your mind.
Yeah.
One question we sort of have is, how do you decide which investors to talk to and what to talk to them about? And do you ever feel like there's pressure maybe from regulation that restricts your ability to communicate information that you might want to some of these individual investors?
Yeah. So we're pretty good about, first we have the earnings obviously as one format where everybody can get the same information. Any of these webinars we distribute broadly. We actually record them and put them on the website, but that you can access them live as well. And anything that's meaningful in terms of communication, we will take the opportunity at a tech conference or what have you to get that information out before we start talking to one-on-one investors. When I remember when Regulation FD, Fair Disclosure came out, I thought, oh my gosh, this is going to be really tricky, but as it turns out, it's actually not that tricky. I mean, you get a sense for what is something that's material that you have to hold off until you have a public forum to communicate it. And then, the more nuanced stuff, you can obviously still have a conversation with investors on. What we try to do is at least have two somethings, tech conferences or whatever, to be able to speak at that allow us to communicate it more broadly. The other thing that we did since I've been here to try to help out even more is, we obviously have this like prepared set of remarks that usually lasts 35 minutes of prepared remarks. And then we have Q&A for the earnings calls. And so we have started to post the entire transcript, what we've written, because sometimes these transcripts aren't done very well and, people might misinterpret the information. We just file that with the SEC and have it broadly communicated so that investors all have the same information to go on. And so really when I'm talking to investors on a one-on-one basis, it's more clarifications, clarifying questions than anything else. They're just trying to get a sense, well, you said this, what did you actually mean? And if anything comes back where it is uncertain, then and that's kind of the message we get back from investors, then we, in the next public forum, we'll look for an opportunity to clarify it to everyone so that everybody understands it.
All right, terrific. So here's a question that's coming up in the chat. It's a question that I have actually previously, so this is terrific. Lots of people are interested. So they're interested in the use of non-GAAP measures, and I think there's sort of a broader question that we have about the use of non-GAAP measures, especially like given the changes in not regulations, but guidance, at least from the SEC over the last few years. But as a secondary part of this question is how COVID is impacting your predisposition towards non-GAAP measures. Can we think about, I don't want to say sweeping under the rug, but changes in business that have come about because of COVID that we might think are temporary using non-GAAP one-time items? Right.
So I try to be on the more conservative side of use of non-GAAP measures. I think in general, if it's a cash item, we generally don't try to adjust for it. Outside of maybe like some big restructuring that maybe has happened. For the most part, we try to run everything through our non-GAAP. The way I kind of philosophically approach it is if investors are going to make a decision based on it, then it needs to be in the non-GAAP number, regardless of whether it's a gain or loss. When I got here, they had a whole bunch of things they pro forma'd out, and I've kind of slowly removed as many of those things as I possibly could. So for COVID, we didn't really pro forma anything out. I'd say the only one that maybe is the most controversial for us is stock-based comp. We do pro forma that one. When I was at ADI, we didn't. I haven't gotten too much pushback from anybody, so I've kind of let it go, even though I'm kind of like iffy on whether that's the right thing to do or not. But outside of that, the things that we do are generally kind of one-off non-cash things that just kind of come up. I do think that it gets abused for sure, and there's no question about it. And I think that without some oversight, would probably get abused even more. But I think at the end of the day, if you do enough of this pro forma stuff about all the bad things that happen to you, it's going to eventually show up on the balance sheet or somewhere, and have a negative impact. So I think that it's a short-term oriented type approach to things, and long-term really doesn't benefit you much anyway. So again, I think we've been pretty mindful of it and tried to make sure that we're only doing pro forma or non-GAAP where it makes sense to do so from an investor perspective.
Okay, great. So that leads right into another related question. You mentioned short-term focus, so I want to ask you about short-termism. So how do you deal with it when investors are pushing you to react to short-term benchmarks that they set for you? How do you respond to this? Is there a way for you to credibly signal a long-term focus? If so, how do you try to do that? And then do you start running into potential problems with forward-looking statements as a result? Like it seems like there's a conflict here where you have to walk a bit of a tightrope, and we're wondering about how you do that and how you think about it.
Yeah. So clearly there is a set of investors that are hyper-focused, and I would say Micron is, even more challenged because this stock has some volatility to it, and it moves a lot with the underlying pricing of the product. And unfortunately, the underlying pricing of products in general aren't known necessarily to investors, but this one, they have an opportunity to get some insight because there's an exchange. There's a DRAM and NAND exchange that you can look at and look at pricing volatility and then predictively make investments based on what you're seeing in terms of the trajectory of that volatility. And so, not surprisingly, that has a whole bunch of short-term day trader type investors in there, constantly go in one direction or another. They constantly are fishing for information on where we are seeing pricing. I'm pretty good at squashing that stuff when I get it. But there's always somebody that kind of pushes the envelope to try to get it. I would say in general though, and I get back to this, we have really shifted the investors we talk to more longer term oriented investors. And when you do that, and that's who you're spending all your time with, they generally don't ask near term questions. Maybe they'll ask one or two just to make sure they understand the near term dynamics. But for the most part, they're really asking about the long term viability of the company, about product roadmaps, where you see opportunities, where you see risks, so that they can get those things clear in their minds. And, again, I go back to just making sure that we are consistent in the way we present that. We always talk about those things on the earnings call. We always try to drive conversation to the longer term aspects of the business, and then back that up, in our day-to-day conversations with investors. And I think in general, we've been able to avoid all the challenges around trying to provide short-term benefit to investors. That said, sometimes the pressure is rough, and quite honestly, a lot of the hedge funds, like your namesake here, have somewhat been, have challenged sometimes, our approach. And I think they've been ordinarily short-term oriented type pressure, because they've obviously got a metric they need to hit and they want to get a certain return. And, so they'll really push that. So anyway, I just try to tune that out. And I just, when they bring it up, I say, look, this is why we're doing it. We got to be around for the next, 40 years. So, and that, in general, sometimes people leave unhappy, but it is what it is.
So it's almost like you're sorting on your own investors. It's
I
a
try
clientele
to.
effect.
Yeah.
Yep.
But there's only so much you can do that. I mean, you always get the hedge funds. And I had a hedge fund told me I should be fired last week for the earnings call. And, you know, I just go, okay, whatever. Now, moving on to the questions that are worthwhile and asking, I'm happy to answer those.
Well, that's the pressures of the job.
Yeah.
So here's another question, sort of, I guess, a little bit related to some of these pressures you face from investors, but it's related to something that they're talking about in their ethics classes. So do you ever see any moral dilemmas where you have to really make a bold decision to maintain your integrity, and where you can see what would have happened if you had gone the other way, where you really know what you would have sacrificed? You know, you can see the integrity you would have given up and what you would have gotten in return, and how you're able to deal with those situations and get past them.
Yeah. So I'll give you a little story. I'll try to be quick about it. But when I was a controller, actually, and I wasn't even the CFO, and there were all these companies doing option backdating. And if, you know, your students may be a little too young for this, but if they go back and look in history, they'll see that a whole bunch of companies would issue an option, and they would, you know, normally you issue an option, it's supposed to be at the current price. They just go back and pick the lowest possible price in the quarter, and they just, you know, change the documentation to say, hey, I issued it at that date. And there were, I mean, a ton of companies doing this. And I wouldn't allow this. And, you know, the guy that was the head of HR and the guy that was the head of operations were telling me I was a moron. Every company's doing this. You need to figure this out. And I'm saying, I'm telling you, you cannot do this. It is not possible. And, you know, it really got heated. In fact, the CEO was even asking me, why is everyone else able to do this? And I'm saying, I'm telling you, they are not allowed to do this. We are not doing this. And the pressure was unbelievable. I mean, we were losing really good engineering talent to other companies that were just getting, you know, they were already in the money by hundreds of thousands of dollars, but of course they were going to take that. And, you know, I stuck to my guns. We never changed it. And then lo and behold, you know, the Wall Street Journal wrote an article about all these companies backdating their options. And it just blew up. And by the way, a bunch of CFOs lost their job. In fact, the reason I got ADI, not the reason I got ADI, but the reason there were so many CFO jobs right around that time was because so many companies were caught in this backdating thing. And a bunch of CFOs lost their jobs. And almost none of them ever came back as a CFO. And so it gets back to my point before, like integrity is the most important thing you have. And I'd say that's true of anything you do. Regardless of whether you're in finance or outside of finance. And, you know, you compromise that once and, you know, that gets, you know, caught up in something and, you know, you're done. So anyway, so I'm very happy I stuck to my guns on that. I was feeling the pressure there every day at some point, but it just goes to show you that, you know, best to maintain integrity.
All right, terrific. Thanks so much, David. If you're in CFR, look out for our discussion of option backdating next month.
Oh, good.
we'll cite David's discussion of it. Yeah. He'll be a good example for us, which is good. And that's going to conclude my part of the Q&A here. So I'm going to toss it back to Bob to finish up our speaker series event. Bob.
Thank you, Steve. Appreciate it very much. David, thank you very much. Before we close, let me just give you an opportunity, David, to say a last few words if you wish.
Yeah. So first of all, thanks everyone for joining us today. And I really appreciate the opportunity to spend some time with Carnegie Mellon. The school is near and dear to my heart. I grew up in Pittsburgh, so I have a lot of affinity for the school. And of course, you know, I went there, so even more so. Look, if anybody has any questions that didn't get answered, you can email me, D Zinsner, D and my last name Zinsner at micron.com. I'm happy to answer any other questions that have come up. And, you know, if you have some interest in Micron, you know, feel free to reach out to me in that regard, either because you're interested in maybe joining, but also if you're interested in the stock and you just don't know why the stock is going in a direction that it is. Most of the time I don't know either, but to the extent I can help illuminate some issues, I will certainly be able to do that. So anyway, thank you very much, everyone. Appreciate
Thank
it.
you, David. This has been tremendous. It's great to see you again.
Yeah, thanks.
And thank you for participating in our WL Mellon Speaker Series and for sharing your advice and your insights with our students. You know, it's important for our students to hear from business leaders like yourself, especially when they're alums of the school. It really complements quite nicely the things that they're learning in the classroom. So I really appreciate you spending the time with us today. I also want to thank you for all the support that you've given the school and the support you've given our students through scholarships and through other financial support that you've provided. You know, in order for us to attract the very best and brightest, it's important that we get support from our alums. And so I want to thank you for all that you've done for us.
You're very
And then
welcome.
finally, I want to thank all the students who were participating in today's event. And I want to especially thank Eleanor Marsh and the Graduate Finance Association for their support and participation as well. So with that, thank everyone for coming today. And David, thank you again for being with us.
Thanks.
Goodbye,
Bye, everyone.
everybody.